Sam Bankman-Fried walked out of a Manhattan federal court on Thursday into a mob of reporters. The former CEO of bankrupt cryptocurrency exchange FTX, who was extradited to the U.S. this week, is out of jail while he awaits trial on federal fraud charges. But his release comes with strict conditions, including a $250 million bond package, as well as confinement to his parents' Palo Alto home, location monitoring, and the surrender of his passport. Thursday's bail hearing comes after Bankman-Fried was taken into FBI custody in the Bahamas and flown to the U.S. Wednesday night, where the pressure on him continues to mount. Bankman-Fried is accused of stealing billions of dollars in client money, much of it to stem losses at his personal hedge fund, Alameda Research. And on Wednesday, U.S. Attorney Damian Williams announced two of Bankman-Fried's closest former associates were now cooperating with prosecutors against him.
The Southern District of New York has filed charges against Caroline Ellison, the former CEO of Alameda Research, and Gary Wang, a co-founder of FTX, in connection with their roles in the frauds that contributed to FTX's collapse. Both Ms. Ellison and Mr. Wang have pled guilty to those charges, and they are both cooperating with the Southern District of New York. Let me reiterate a call that I made last week. If you participated in misconduct at FTX or Alameda, now is the time to get ahead of it. We are moving quickly, and our patience is not eternal.
Bankman-Fried has acknowledged risk management failures at FTX, but has said he does not believe he has criminal liability. The son of two Stanford professors and a graduate of the elite Massachusetts Institute of Technology, Bankman-Fried rode a boom in the value of Bitcoin and other cryptocurrencies to become a billionaire several times over. But last month, reports that FTX had commingled client funds with the founder's hedge fund led to a wave of withdrawals, prompting the exchange, valued at $32 billion last January, to declare bankruptcy. The U.S. attorney overseeing the case called it one of the largest financial frauds in American history.
Twitter should be directly monitored by the European Commission. That was an idea put forward by a senior German official on Thursday. Sven Giegold works on competition policy at Germany's economy ministry. He argued that Twitter's erratic behavior under new owner Elon Musk posed a threat to free speech. Giegold wrote a letter to two European commissioners where he said the EU should launch an investigation into the social media firm. He also wanted the Commission to stop what he called Twitter's anti-competitive behaviour. Twitter and the EU did not immediately respond to requests for comment. On Tuesday, Musk said he would step down as Twitter CEO. The months since his $44 billion takeover have seen chaos and controversy. News organizations, officials in Europe, and advocacy groups all criticized Twitter's decision to suspend journalists' accounts, though they were later reinstated. German Chancellor Olaf Scholz's government has previously said it had grown concerned with developments at the firm.
Wall Street's main indexes closed sharply lower on Thursday, with the technology-heavy Nasdaq leading the declines, as shares of Tesla plunged and investors dumped Micron on news of job cuts. The Dow shed just over 1%, the S&P lost nearly 1.5%, and the Nasdaq dropped almost 2.2%. Tesla sank nearly 9% after Elon Musk's EV maker doubled its discount offering on models in the U.S. this month, amid concerns over softening demand. Tesla is now on track for its worst month ever. And chip maker Micron Technology also weighed heavily on the Nasdaq after announcing it will lay off 10% of its workforce next year. It's the latest major tech company, along with Facebook and Amazon, to announce massive job cuts. Mark Newman is Chief Investment Officer and founder of Constrained Capital.
So I think the tech companies really overhired. And I think that part of that push for them to overhire was the continuously easy rates. And that allowed a bit of excess hiring, maybe hiring, let's call them chief sustainability officers, chief people officers. And really, excess hiring when rates are easy is not a very tricky maneuver, meaning if rates are low, your bogey, break even, let's call it, on a new hire is not as high as it is when the 2-year yield goes from 75 basis points to over 4%. All of a sudden, your errors, your mistakes, your costly hires, let's call them, become that much more compounded.
Tech layoffs aside, the labor market still looks pretty tight, with filings for state unemployment benefits rising last week but still below economist estimates. That, along with a stronger than expected final estimate of the third quarter GDP, led investors to worry that a resilient economy would lead the Federal Reserve to keep hiking interest rates for longer than expected.
Tesla is offering discounts on some of its key models in the US this month. Its website showed Wednesday buyers can get a $7,500 reduction on Model 3 and Model Y electric vehicles. It's double the $3,750 credit it has offered on the same cars delivered before the end of the year. The automaker also recently offered free supercharging for 10,000 miles for December vehicles. Tesla's move comes just days after the US Treasury Department delayed restrictions on EV incentives until March. It means Teslas and other US-made EVs are likely to temporarily qualify for the full $7,500 credits. Customers have cancelled their orders and held off their purchases until the new credits take effect in January, and that has weighed on Tesla demand. The discounts are rare and follow a run of price hikes over the past couple of years. The automaker blamed supply chain disruption and inflation for that. Analysts are worried rising interest rates could hurt demand for Tesla. They are also concerned by CEO Elon Musk's controversial Twitter management and how it could hurt the Tesla brand and sales. In October, Tesla said it would miss its vehicle delivery target this year, but it played down concerns about demand after its revenue missed Wall Street estimates.
FTX founder Sam Bankman-Fried is back in the U.S. after being extradited from the Bahamas over a case that has been described as one of the biggest financial frauds in American history. A plane a source said was carrying the crypto mogul was seen leaving the Bahamas before arriving in Westchester, New York, close to midnight Wednesday. While that flight was midair, U.S. Attorney Damian Williams said that Bankman-Fried was in FBI custody and that two of Bankman-Fried's former associates had pled guilty to fraud charges.
I'm announcing that the Southern District of New York has filed charges against Caroline Ellison, the former CEO of Alameda Research, and Gary Wang, a co-founder of FTX, in connection with their roles in the frauds that contributed to FTX's collapse. Let me reiterate a call that I made last week. If you participated in misconduct at FTX or Alameda, now is the time to get ahead of it. We are moving quickly, and our patience is not eternal.
Bankman-Fried's departure comes after he was arrested last week on a U.S. extradition request in the Caribbean country where he lives and where FTX is based. Federal prosecutors in Manhattan have charged him with stealing billions of dollars in FTX customer assets to offload losses at his hedge fund. Bankman-Fried initially rode a crypto boom to become a billionaire several times over and an influential political donor. But FTX crashed, and the $32 billion exchange declared bankruptcy in November, with Bankman-Fried stepping down as CEO the same day. The collapse was driven by a wave of customer withdrawals amid concerns over commingling of funds with that hedge fund, Alameda Research. Bankman-Fried has acknowledged risk management failures at FTX, but has said he does not believe he has criminal liability.